Good morning, everyone. Are you able to smell? Yeah, our topic is this is last session, and we have to cover three more units in accounting for managers. Uh, Today we are going to discuss about first we are going to discuss about segment reporting. So we are going to cover meaning and need of segment reporting, objectives of segment reporting, basis of segmentation, advantages of segment reporting, limitations and problems of segment reporting, development of segment reporting, and segment reporting in India. So, what is the meaning? What is the need for a segment reporting? Segment reporting is the disclosure of. Are you able to listen now? No problem, right? Can you hear me? Segment is about disclosure of public companies' financial details of key units or segment based upon certain regulatory requirements. See, businesses will normally will not be doing a one particular will not be working on one particular segment. So they will be working on different categories, different departments will be business, and each has its own unique responsibility and obligations to be fulfilled. In a large scale business organization, there was a need to understand what each unit of the business has been performing. So normally under financial reporting, what we will do is we will present a consolidated picture of the whole business. So we are going to give the profit and loss account and balance sheet of all the business unit at a glance, and we are not going to give a segregated image of each business segment or each business unit. But it is essential to have a understanding about how each business segment of a business organization has been performed. So, what segment reporting will help the company stakeholders to understand revenues, expenses, and other ratios for each business unit and decide on their investment strategies accordingly. See, overall the picture looks good, and sometimes some units will performing better, and sometimes some units will not be performing better. So, when we are doing segment reporting or segment wise accounting, so it helps the investors to understand what are the actual revenues and what are the actual expenses, and they can use other expenses, other ratios to understand the performance of a business unit. So accordingly, they can decide that whether the business has been doing well or not. Is there any whether the business has been doing well or not, so that they can take their investment decision accordingly. They can take their investment decisions accordingly. Segment reporting of a company, as the name suggests, segments the finances recorded in the financial statement of business organization. See what we are talking about segment reporting. What does a segment reporting? Segment reporting as it is nothing but class. What are the various financial transactions happen with respect to a particular business unit. So we will classify cost and revenues expenses of each business unit, and we are going to present the performance of each business unit in a systematic way. So this is what we call as segment reporting for a company. So the organizations divide their operational units into different categories and make data available and accessible to the stakeholders, creditors, and investors who study for effective decision making. See, they will divide the business into different categories, and for each category, the data will be made available to the stakeholders. The stakeholders will be like shareholders. It will help them to understand to make a proper decision about the overall business organization. And if one person is interested in one particular business segment, he can understand the performance of that particular business segment. So for this purpose, the financial standards are also there. International financial reporting standards set the guidelines to how to report the information related to the segments in the financial statements that were prepared annually. So the International Financial Account Reporting Standards guideline provides the guidelines for the companies how they can segment the business operations. What are the categories? What are different categories of business? What are different categories of a business organization? How we have to report the revenues expenses of a different business organization will be provided under the The guidance will be provided under IFRS standard. The IFRS segment reporting process. Large organizations divide their businesses into different units, where these units are created based on the product or geographical location. See, mostly as per the IFRS classification. So, the businesses can be broadly divided, broadly segmented, based upon different type of products or services they were offering, and different type of geographical location. At least geographical locations, countries operating uh, com- outside their company's geographical location. So IFRS basically focuses on classifying the or segmenting the business organization based upon the product types of products they're offering, or based upon the locations they were providing the services. So normally here what we are calling units can be called as segments, or departments also we can call, but as far as terminology is concerned, we have to consider each business unit of a business organization can be considered as a segment. At the end of the year, all the units are to be merged with that of organization. But certain units, as per the criteria mentioned, have to be reported separate. See, mostly it is not necessarily compulsorily to divide all the business organization into different units. So certain type of business units need not be represented separately. So those units can be merged up with an organization, and the reports can be prepared as a part of the group, But for certain set of business units, we have to prepare the segment reports. So for that, the guidelines will be available under IFRS standards, and also Indian accounting standard is also there for segment reporting. We can also take segment reporting from the Indian accounting standards also. Indian accounting standards are nothing but the derivatives of the IFRS standards. We have a standard on segment reporting also on under Indian accounting standard. So this is about the meaning of segment reporting. It is about dividing the business organizations into different segments, and to understand the performance and the revenues and expenses incurring by the organization in different business units, and how they are contributing to the performance of overall business organization. So now by doing this, what the segment reporting? I wanted to make it more transparent and understandable. The objective of segment reporting should be to make the accounts more transparent and understandable. It should not give an insufficient information. So it should give more information and clear information for the stakeholders to have a clear understanding about the performance of the business organization, for better analysis and risk returns of the organization. So when you're studying the performance of a business based upon different units, it will gives you an idea to understand the risk returns that can be derived from the performance of the overall business organization. So it will give us a classified view about different segments, so that we can understand the risks of different business units and returns from different business units that can be comparable with the overall business objectives, and we can take a better decision in terms of overcoming the risk and improving the return. And also to analyze profitable and loss-making units. See, all business units cannot be profitable, and some business units may be loss-making also. So segment reporting will help to identify such business units which are either profitable or which are loss-making, so that a decision can be taken whether to continue the loss-making unit, or whether to improve the profitability of the other business unit by closing down the loss-making units. And also for better understanding of the performance and evaluation of the results of the overall organization. So that is the overall objective of segment report. We will analyze individually, and we will try to understand the performance of the organization as a whole. So it provides important information about important units to the stakeholders. Stakeholders are nothing but the shareholders, and other stakeholders will also be there. But the more important objective should be to fulfill the obligations of the shareholders. But under the segment reporting, we can give desired information of different stakeholders depending upon their importance in the decision-making process. And to provide investors the complete details about the units, their profitability. So the shareholders will understand the overall different profitability of different business units. To help the organization in better decision making, as planning about expansion or diversification is to be done based on the results of the segment. So based upon the results of the information given in the form of segment reporting, we can take a decision as to we have to expand the business organization, or we have to diversify into other areas, or we have to close down any particular business segment. So that decision can be taken based on the reports given, based on the information generated under segment report. It will help the creditors to understand the credit terms. So when creditor wants to extend the credit facility, they have to understand, they need it. Sometimes it may not be essential all the time. Sometimes they may be interested to know the performance of different business units. So in that case also, segment reporting tries to focus on fulfilling the information requirements of the creditors also, and to help the shareholders decide whether to retain the shares or sell them off. See, when looking at performance of different business units, a shareholder who is investing in the company can have an understanding whether to continue with this business or not. So he can take a decision whether to continue with this business, or he can drop the shares in the company and he can purchase the shares of another company which is doing well in that particular industry or in any particular segment in which the particular investor is interested. It helps the management to decide whether to expand the segment or to sell off the segment. This is again the decision related to the management. The management also can take a decision based upon the performance of each business unit, and they can take whether to expand that this particular business unit or they can close down the particular business. So these are the overall objective of segment reporting. It has to full overall objectives of segment reporting. And we are talking about segmentation, segment reporting, and we are talking about different business units, and we are talking about the objectives of segment reporting. Then how to segment? How in a business organization, how we have to divide that? What can be considered as a particular business segment? In what context we will consider this is a particular business segment that has a potential impact on the overall performance of the company. So that is the important decision one has to make before the segment reporting process is initiated. It is important for the businesses or individuals to understand what makes an operating unit eligible to be represented as a segment. So we have to understand what will be considered as a segment in a business organization. So under the accounting standards, what I have mentioned earlier, it is on Indian accounting standards or IFRS standards. When a business unit can be considered as a segment or an operating unit can be considered as a segment. See, if the revenues of that particular segment, say for example, the company is operating two business units. One is in its origin is in India, it's operating in some Australia, and one operating in US. So, if the revenues of that units which are operating in the other countries, if the revenues are more than 10% of the overall revenues of the business organization, then that segment can be considered as a part of revenue. That segment can be considered as a part of segment report. Similarly, if the profitability of any of the business unit is also more than 10%, then such unit also can be considered as a segment. So we can consider it as a part of segment report. If the assets are greater than 10% of the organization's overall total assets also, all these categories signifies that importance of that business unit in the business organization. So for example, earlier we considered that two business units are operating, one is in Australia and one is in USA. If any of these business units fulfills this criteria, that is their revenues or profit margins or asset values are more than 10% of the overall profits of the business organization, then that segment should be considered as a separate segment, and its performance should be reported separate. So any segment meets any of the above criteria. In that case, that segment is to be reported separate. That is, all incomes, expenses, assets, and liabilities of that segment are shown separately as per the requirements of the law. See, so we cannot present whatever we want. So we have to present as per the guidelines given in the accounting standards or as per the regulatory requirements. So we have like that we have to fulfill the information requirements of the basic classification of classifying a particular operating business segment. What are the advantages of segment report? Segment report a better understanding of the financial statements. So we are presenting financial statements consolidated. We heard consolidated financial statements is nothing but presentation of financial figures of all the business segments at one place. So by doing segmental reporting, what we will do is we will have a better understanding of the financial statement. Consolidated financial statement, what are given in the what will be given in the financial state annual reports, they can be better understand by considering it the segment report, because it gives information about different business segments, so that if the total revenue is showing one figure, so we will try to understand that figure from where that figure has come out. So from which business unit maximum profits have been contributing to the overall performance of the business organization. So that type of advantage will be there under segment report. The profit making, loss making units can be easily identified with the help of segment report. Company's profits, but business units may not be performing well. See, for example, in the earlier case, that the company is operating in two different areas. Say, for example, in America, and here, if the overall performance of company is looking and its performance in the Australian region is not performing well, based upon segment reporting, we can take a decision with the rest of each business unit. It helps in the optimal utilization of resources and better presentation. So there will be more resources available within the business organization. So based on the information generated in the form of segment reporting, we can understand to which area we can diversify the available resources. So we can overcome the challenge of misuse of the resources. Underutilization of the resources can be saved by pushing them towards more beneficial segments, more beneficial areas, so that the performance of the company can be increased. It helps the potential investors in better investment decisions. See, the overall business objective or the overall objective of any reporting, whether it is financial accounting or whether it is social reporting or whether it is human resource accounting. So whatever accounting we are doing, so or whatever reporting we are doing, the ultimate objective should be to convince the investors. Investors are the major stakeholders of a company. Uh, so what they will do is they will take the decision whether to invest in your company. If they are not interested, they will take back the money. So what happens is that segment reporting will use better information for the potential investors who are interested to invest in the company for making better investment decisions, so that the financial position of the company will be increasing. This is the advantages of segment report. And now let us understand what are the limitations and the problems of basis of segmentation. So first problem comes with how to spend the business organization, how to divide a business organization into segments. So identification segments is a major problem, though it is the primary criteria that is to be followed. But doing a segmentation in an organization is a very difficult process. So it can be done on organizational division or industry, market, product, etc. See, in the accounting standards, we were given a broad classification of business can be segmented based upon the products they are types of products they are offering, areas in which they are operation, geographical regions in which they are operating. But when it comes to practically, all the business may not be having such a large scale for the segmentation. See, uh, normally product classification can be done and geographical classification can be done for a large scale business organization. For a small scale business organization, such classification may not always be possible. See, so therefore, one of the limitations with respect to the businesses which are having a limited scale operations or which are operating into a limited geographical regions, so there may be a chances of facing difficulty in the segmentation of the business itself. And allocation, what happens is uh, there may be different units, different products may be operated. So segment reporting, so there may be some in transfer pricing interdepartmental transfers. So in such cases, classification of cost between different products is a difficult task. Uh, it's a difficult task, classification of cost under the segment report. And the disclosure cost. So one of the important limitation and problem with respect to segment reporting is that we have to give more disclosures. So for giving more disclosures, we have to collect more information. Collecting information is again time consuming and it's a cost effective, it's a costly process. So segment reporting process itself constitutes some cost for the purpose of giving the disclosures, required disclosures. The provision of additional disclosures along with the routine information increases the firm's operating cost in terms of cost of data collection and for the development of management control systems that are essential collecting the information. Managerial conservatism. So sometimes when there was no proper regulatory mechanism and there was no demand from the side, so the management may not show much interest towards segment reporting. They may be disinterested in making a presentation because it is a costly and time consuming affair. So that's why they may be interested to reporting. So as we already discussed, classification cost between two different business units is a challenge. Like that, there are many other transactions that will happen between different departments, and it will be always difficult to classify such transaction between different business between any two different business units. Difficulty in providing data. See, measurement. Measurement is about quantifying the information, quantification of the information. So this will normally happens in the financial reporting process also. Normally, this will be normally happen with the financial reporting process. So automatically, this measurement problem will affect the segment information also. So what happens is that providing the accurate information, uh, genuine information, by the measurement. So if you're not following the proper measurement basis in reporting the segment reporting figures, then there will be chances of misleading information. Misleading information. So misinterpretations. So misinterpretation is nothing but the way how we are understanding the financial figures. So what happens is that we will give different figures. We'll give an understanding about how the overall business has been performing by looking into different business units. But how the people are interpreting, how the people are understanding, whether everybody is understanding as how we are expected, how we wanted to understand the information. Are they able to understand the information in such a way as we expect? So there is no chances that this may happen. So it's same thing like financial accounting only, but we are doing it for different business unit. Here also, misinterpretation of data will be there. Though there are no specific particular standards are there, these IFRS standards and the Indian accounting standards will give the guidelines to bring more clarity information presented in the segment reporting. So how this segment reporting has developed actually? So it came into being in the year 1997 when the Financial Accounting Standard Board of USA, United States, came out with an accounting standard disclosures about segments of. So that the SFAS number 131. This is the accounting standard given by the US under US GAAP by the Financial Accounting Standard Board. This talks about the information that need to be given for different units of business organization and the related. Subsequently, that accounting standard was recodified under FASB Accounting Standard Code 280. Accounting Standard Code 280. So that means just it was updated. So according to this standard, what we can say that public companies are required to disclose certain information, specified components of segment profitability, as well as specific information regarding a reportable segment. So as per the guidelines given in these accounting standards, the companies has to give uh, uh, how the profitability of the segment has been generated. They have to give information profitability component and also some key information which is essential of decision making can be given. So that guidelines are available and FSB accounting standard code and afterwards FS also came out with an account standard and in India also an account segment report. Currently segment reporting disclosures are not required to be presented in any particular format by either US GAAP or IFRS. So specifically, they are not mentioning anything, but they are giving certain guidelines how to present. They are not mandating any specific disclosures that need to be given for segment reporting. So in India, the guidelines for the segment reporting was available under Accounting Standard 17 segment reporting. So the equivalent IFRS standard is IFRS 108 operating segments. So after we are converging with the IFRS standard, we again reformulated the accounting standard reporting as 108 operating segment. So for those companies who are operating in India can apply Indian Accounting Standard 108 operating segments for the purpose of segment reporting. And for the global companies who are interested to directly adopt IFRS standard, then they go with IFRS standard 108 operating segment. So in India also, one more thing we have to understand is that this Indian accounting standards, which are formulated based on the IFRS standards, need not be followed by all the companies. Only specific categories of listed companies. For other segments of the business organizations, they can follow the accounting standard segment, accounting standard 70 segment report. So that they are more specific to the context. These are more specific to the IFRS that are relevant in the global level. So this is how the process. This is how the concept of segment reported emerged in the process of financial reporting. Just to recall this, what are the basic steps in the segment reporting is the first step is and uh, merge it up into a single unit, singularity operating units in a business unit. Then we have to define a reporting unit. What is a reporting unit? So we have to define the characteristics of that business reporting unit, and we have to define the operating activities of the business unit. So then uh, following the guidelines given in the accounting standards, we can give segment-wise disclosures for each business or for each reporting unit. We can give different disclosures that are essential to understand the information given in the segment reporting, and we can in the last case we can club together all the disclosures into a single annual report or in the overall financial reporting by giving entity-wide disclosures to all segments of a business organization to give an overall picture of the entire business organization. So as we already discussed that two accounting standards are available in India. One is Accounting Standard 17 segment reporting and India is 108 operating segments. One is mostly applicable first accounting. Indian Accounting Standard 17 is applicable for those listed companies that are mostly confined their operations in India only. India is 108 operating segment. This is applicable to those companies who has global presence, international operations. They can take the guidelines given under the India is 108 operating segments. So as far as the segment reporting status is concerned, we can understand that most of the companies are giving better image about uh, they are following the segment reporting process uh, satisfactorily by dividing their business operations as per the products they are offering based on the geographical locations they are performing. So the application of accounting standards in terms of financial reporting also was also found to be good. So the information that was given under segment reporting in the Indian context was also found to be making some useful decisions in terms of making investment decisions. So the segment reporting process in India was given here in this context. Based on some research articles, this information is considered that the overall performance of the segment reporting in India is looking satisfactorily good. So just we'll see. This is an example. This is an example of the company Infosys. We can see that They classified their activities in terms of financial services, manufacturing services, telecom, retail, and others. Then they gave the total figures. So this is how they presented in terms of the products and services they are offering. This example gives the segment reporting in terms of the products classification. Just to have an understanding, I gave this. This is one of the example of segment reporting in India based on the products and services offered. And the same company, it is giving information geographical region wise in North America, Europe, in India, and rest of the world. How their operation, how their revenues they are generating. In Europe, how much they are generating. In India, how much they are generating. So in the rest of the world means in other countries, So they clubbed different countries into under the context of rest of the world. So they considered North America, Europe, and India as their major business segments, and remaining all are under the rest of the world. Then they presented the total revenues from all the geographical regions. So this can be same. You see, revenues in terms of revenues in terms of all products is 140, and the in terms of geographical segmentation also we can see the total figure. But under segment reporting, what we are seeing is the classification in terms of the products and in terms of the geography. This is what the benefit of the segmental reporting. Okay. So now this is about segment reporting. Is there any doubts for anyone on segment reporting? Any doubts? Yeah. Okay. So let's move on to next topic. Value added account. Let's see what is value added account. Okay. So under this setting, we try to understand the concept of value added. What is meant by value added statement? What are the assumptions of a value added statement? Significance of preparing a value added statement, and value added statement and the difference between value added statement and the profit and loss account. And what is the format of a value added statement? Advantages of a value added statement, limitations and problems of value added statement. And then what concept of economic value added, significance of economic value added, functions of economic value added, problems and limitations of economic value added reporting in India. See, before we are discussing this concept, I wanted to make you one thing clear is that financial accounting, social accounting, human resource accounting, segment reporting, and now value added reporting. These are all different contexts of looking into the performance of a company. So everyone come out with a different viewpoint in which the performance of the company can be evaluated. So this is how different forms of accounting has emerged. So this is and in this process of emergence is nothing but adding one context to the other context. So financial reporting figures are not giving enough information. We went for segment reporting, and when financial informations are not giving information about the human resources, we went for human resource accounting. And when financial reports are concerned has to concern about the society, they have to give social accounting. And this value added reporting is also one of the version of, we can consider it as one of the version of the social accounting. So how we will under value added reporting, how we will understand that companies responsible for the society and how it is adding value. What we mean by value addition, we'll try to understand that in this context. Okay. So let us understand what is the concept of value added. So value added is nothing but the extra value created over and above the original value of something. See, what is value addition in business? You mean, see, we will be taking raw materials and we will be converting them into finished goods. We added some value to the raw material that we brought, and we converted that into a finished product. So this is what an example of adding value. So this can be done with respect to products or any services. On a overall, the performance of the company can also be determined that how they are adding value, how they are creating benefits by utilizing the resources of it that are available in the natural environment, that are available in the form of human resources. How they are creating value to overall value they are adding. So this context, this vision will be studied under value added concept. So this gives an overall perception about the products and services offered by the company that some value addition has been done. But how to convince that a value addition has been done? So value can be added by providing an extra services in the form of after sales and better customer services also. Uh, so we can add the value of the product by giving some extra accessories. Like for example, in the sale of computers, we can say that we can give some uh, basically the computer will be getting along with a keyboard, monitor, and a mouse. So along with that, if they give some other accessories, it adds value. This is how company is adding to the product, adding value to the resources that it is utilized. So under the concept of value added, what we will try to do is, so the increment in value of this product, how it was happened, how this value has been increased. That means for the creation of this value, how the company has been used its financial resources. So we try to analyze the performance of the company in that context. Let us understand this. Okay. So for the purpose of calculating value added and its distribution, a value added statement is prepared. So for that purpose, we will prepare the value added statement. The main concern of the statement lies in deriving a measure of wealth that is the entity has created to the society to the collective efforts of various stakeholders. See, we are adding value. How we are for that we are utilizing the money and we are utilizing the other resources. So in this way we are creating the value for the product or services in the market. So for creating this value to a product, we are utilizing we are serving other people in the society also. So under value added statement, what we try to do is that what are the areas we contributed for creating the value for this particular product. So the preparation of a value-added statement is mostly voluntary in nature. There is no any regulatory obligation they need to follow. See, it looks a little bit confusing. Once you see some examples, you'll understand what is meant by value added and what is meant by a profit and loss. Okay. So just this is a theory part, you try to put it in your mind. So this is not a balance sheet or profit and loss account. This is the reverse for a balance sheet and profit and loss. Okay. The simplest and most immediate way of putting profit into proper perspective with whole enterprise. So how we are utilizing the capital, how we are utilizing the management, how we are utilizing the employee. So by utilizing them, we are adding the value. How we are utilizing them means we are paying for them. We are paying for the management. We are utilizing the capital. So by utilizing all these resources, we are adding the value to our business. This is what we will measure. So maybe defined as a statement which shows the income of a company as an entity, how the profit is earned. For earning the profit, how these people are contributing. That we will classify in the form of monetary units. See, for example, 1 year, in 1 year, we got 1 lakh rupees of profit. For earning this profit by adding value to a product or services, how it happened? It happened by paying an salary to an employee. If you after paying salary to an employee only, he will perform, and accordingly, you will do the manufacturing activity and you will do the sales activity. Then sales will happen. Then profit will come. So in this way, what we are doing is we are adding value to the society by paying them the salary. This is the this is how he contributed for the profit. So we will take the figures in the reverse order. So for achieving the net profit, what are various expenses incurred and how it will contribute for the society and how it will add value for the product. This is what we are going to study under the value added state. Okay. So what are the assumptions is that it is not a substitute. It's only a supplementary for the profit and loss account. We cannot consider it as an alternative for the profit and loss account because as I said that it is one form of profit and loss account. It is a reverse form. In the profit and loss account, what we will do? We'll put the revenues, we'll put expenses on one side and we will calculate the profit. Here what we will do is, we will see how this profit can be related to various segments, various persons, various people involved in the uh, various people involved in earning this profit. So the company itself cannot earn profit. So that what they are weaving is that though you are earning profit or loss, in certain way you are serving the society also. That is what they wanted to understand from the purpose of value added statement. So it is prepared on the basis of data recorded and processed by the conventional accounting system only. So unlike, however, what are the principles we are following under conventional accounting? The same principles can be followed. In though they are prepared on the same concepts also, but there will be difference in terms of the presentation of the information under value added statement and profit and loss. So what happens is that the profitability is generated from some certain non-cash expenditures also, but under value added statement we will look at how cash has been effectively utilized, how it has been distributed for the society indirectly. So understand the socio-economic impact of the business organization. Yesterday we studied about social accounting, how the companies will help the society by serving the people and earning the profit and protecting the environment. So this is also one form of social accounting, and it will try to and we will try to understand how it is adding value to the society. It recognizes the contributors and others who have contributed in the process of generating values. So as I told that how employees are helping, how governments are helping, how providers of loan capital are helping. Each of them contributes to the value addition and get their proportion of the share in there. So by without their help, we cannot do. And for helping them, we are paying them. So what that does it means? Though a company is not that it means that so it is doing some regular activity by it is doing regular activity by serving the people who are involved in the production operations. The absence of profit doesn't mean that the enterprise is contributing nothing to the society. See, if the businesses are earning losses, so we cannot see that the business is not doing anything to the society by paying salaries and by paying taxes. They're indirectly adding value to the society. They are contributing some value to the society. So, so what value added statement gives information is that so we will not completely look at profitability of the company. We will look at how it is contributing for the economic development of the country. Economic development of the country. How it is supporting the economic activities of the country. This perspective can be derived from the preparation of a value-added statement. Value-added statement. Optimizing value-added is more meaningful than optimizing the profit because added value determines rewards for employees as well as for the providers of the capital. See, we have to focus on optimizing the value addition instead of profitability. This is what this concept says. It may be true or it may be false. It depends upon the people who are arguing with this. But this the concept of this is that you should focus more on creating more value to those people who are helping your business organization, so that it is considered to be economically supported. This is the objective of value added statement. Under this, the perspective of profit has a very limited scope. So the production activities also will be considered from that perspective of how it is contributing for the society, how it is benefiting the society. So from that perspective only, the profits or the resource allocation of the production activities can be done. So it doesn't mean that they don't earn the profits. They have to earn the profits, but the first preference should be how they are serving other people, how they are taking the advantage of uh, people, those who are helping them in the process of creating value for their business. So these are the major differences. Profit and loss account shows the expenses of income of operations of the business and the final results of its operations. It shows the results from a owner's viewpoint only. As a owner, you can see what are the expenses and what are the revenues earned. So the profit and loss account statement gives the what is your performance in terms of revenue generation. The value added statement is prepared from the same figures also, but it shows the contribution made by various parties to the added value. This thus wider in scope and gives more detail than profit and loss account. So under value added statement, what we will do is that for generating the profit, how different people contributed in different ways, how they contributed for the generation of this profit. That is considered under value added statement. Value added statement indicates the social objectives of a business. That's what I told. While profit and loss account is profit oriented and is prepared only from the viewpoint of owner. So preparation of value added statement is a part of social accounting where the objective is to present the information about how the business is supporting the socio-economic activities of the country, socio-economic development of the country. So while profit is a motive, but at the same time, how it is contributing to the other areas of the economy in the form of paying taxes, in the form of providing jobs, or in the form of providing them the salary. So those who are working in the company, how they are helping for the company in generating these profits. Value added statement shows the contribution of various parties to the business, namely the employees, uh, providers of the capitals, owners of the capital, owners of the business organization, government. So how we are trying to understand how they are contributing for the creation of value for the business. Profit and loss account does not show the individual contribution of the parties. It will shows only the profit or loss of the owners and taxes paid to the government. Under profit and loss account, we will see what are the revenues and what are the expenses, and we will understand what is the profit. But under value added statement, we will see how different people are helping the organization, in what way they are helping the organization, those who are working with the organization. It is how we are relating with the people working in the organization. So, see, this is a value added statement. You can see here, here they gave a, you can see this application of value added. So, received by workers and employees. Their contribution can be seen in terms of how much money they received from the company. So, received by providers of loan capital. Under B section, you can see. See, the above part is, regular business act. So we calculated the revenues and we calculated the expenses and we calculated the net value added in the form of regular business activity. Under the B part, what we are doing is now for generating that sales or for generating that net added value, how different people were supported the company. That support can be addressed in the form of the money we paid to them. So we paid to the employees, or we are paying to the loan providers for us. We are paying for the government in the form of taxes, and also we are paying back to the owners also, that is shareholders also. This is how we are adding value. We are taking the advantage of the resources, human resources, institutional mechanism, regulatory mechanism. So we will get the same net profit figure only, but the expenses how we pay to different people will be classified into different segments, different components. This is another one side, how the value was created, from whom it was created on the right hand side, by paying to the employees and by utilizing the loan given by the providers and by utilizing the benefits given by the governments and the owners. We try to create value for the through the product, through the creation of products and services. So that means that by in the net profit what we earn, how these people we contribute, we are just segmenting that expenses. So in the profit and loss account, we will not show it separately. In the value added statement, we will show separately, considering it as a social obligation, responsibility that you are fulfilling. Not only you are earning the profit, for earning the profit, we are also taking the benefit, or we are also taking the services of the other people in the society. This is how we are representing in the value added state. So this is one example we can see. The sales are 25 lakhs a year, and these are all regular expenditures that are incurred by the company. Say 10 lakhs, total material cost is 10 lakh 70,000 rupees, and other expenses, total service expenses, 1 lakh 30,000. See, after calculating this expenditure, we'll see that it is 12 lakhs. Total expenses are 12 lakhs. Total sales are 25 lakhs. Production expenses, total material cost is 10 lakh 70,000, and operating expenses is 1 lakh 30,000, and total it is 12 lakhs. 12 lakhs. So from 25 lakhs, if you deduct 12 lakhs, what we are getting is, we will consider it as 13 lakhs profits. Okay. But for getting this 13 lakhs, we can show that how other people are benefited, how other people are benefited. We can see this. See, for getting this 13 lakhs from core operations as profit, this is how we took the help of other people. This is how we created the value. We are telling that we earned this profit. Through sales, we got income, and these expenses were covered through the sales by adding value. This is called as this 13 lakhs. Whatever the profit that we derived is with the help of these expenses that we incurred. So that a raw material has been converted into finished product. It has been sold, and we earned a profit of 30 lakhs rupees. For earning this 13 lakhs rupees, for creation of value to the product, we have taken the advantage of these people. So this 13 lakh rupees what we added in the form of profits is because of the contribution made by these people, these categories. So this is what we will call as a value added statement. So, so under value added statement, this is about value added statement. I think it looks a little bit confusion. I understand, I can understand, but uh, this is very, to put it very simply, we are making a product, we are selling it, we are earning the profit. That is what we will see under financial account. Under value added thing, what we have to see is, you may ask, sir, why all these things? Why we have to do all these things? See, uh, in any area, there will be always some discussions happening. So financial area of financial accounting is also one area where there is a lot of discussion. So businesses are more responsible for the society. So in this case, different people will come out with different perception to understand the performance, to understand the value of the business to the society. In this process, different accounting processes are emerging. So this value added statement is also one of such things that we are creating a product and we are selling it. So you are benefiting it, then how we are benefiting to the society? That question arises, and they went in a reverse way to understand. We are paying the salaries, we are taking the loans, we are paying the taxes, so that we will able to get this 13 lakhs rupees. So this is what they are telling. This is how we are creating a value to the product by serving the society. This is the this is about the value added state. Okay. Then advantages. The advantage towards the employing company. See, when you are considering the number of the employees, in example, in the earlier employees for getting this 13 lakhs rupees, you see, staff welfare expenses were incurred in the form of 1,58,000. By paying that staff welfare expenses, they performed well. So because of their performance only, we got the 13 lakhs rupees. By paying them 1,58,000 rupees, by with their performance, we were able to earn that 13 lakhs rupees. So under value added statement, it will give a moral boost to the employees, considering that we are making some contribution to the organization. So they will feel satisfied. We are also doing some work to the our value is also has been considered in the performance of the company. So value added statement makes it easier for the company to introduce a productivity linked bonus scheme for the employees. We can give bonus by looking at the contribution, and also we can see that how a company is contributing for the national income. So by looking at the salaries, wages that we are paying, we can see that what is the contribution of a company towards the national income. Growth in the national income shows that growth of an economy. So it will be a part of analyzing the performance of a company with respect to the national income also. So it gives a better measure. It can give a better idea about the performance of the company in relation to the economic prospects also. And we don't want to follow any specific rules or regulations. Uh, Whatever we are following in the preparation of financial statement and balance sheet, the same rules and regulations can also be followed in the preparation of value added statement. It is only that we have to make a classification and we have to uh, uh, identify what is the contribution of these individual components to the overall profit of the business organization. Okay, these are the advantages of the value added statement. Okay, let us see the problems and limitations of the value. So it is not the main statement, as I already discussed. It will gives you only a supplementary information, and the value added statement is not a standardized form. It keeps on varying depending upon the company and depending upon the organization. It will be keep varying, and there is no any specific format. Whatever you will consider that you are adding value to the society can be considered as a part of value added statement. It is argued that value added shows the application of value added to several interest groups like employees, government, shareholders, etc. The risk associated with the firm is only borne by the shareholder. See, we are telling that I am contributing to the society, I am contributing to the government, I am contributing to the national income of the country. But ultimately, earning profit is very important again. You know, so it's only on the paper it looks very good, very nice, and very interesting. But overall, if you are not getting profit when we are putting more salaries or when you are paying more salaries, it is again a burden for the shareholders. They will lose their profitability opportunity. They won't be getting more profit. So that is one of the limitations or one of the problems under value added statement. Then it does not require any special role. So it doesn't give, that's what we are telling. It doesn't give any importance to the profit. It will only looks at what it is paying to the employees, what it is paying in the form of taxes, or how it is utilizing the loans, how it is paying back the loans. Only these things can be viewed, but the profitability angle will be minimal in this in the process of developing a value added statement. Okay. So this is up. This is here up to value added statement. I think you have an understanding about value added statement. And another little bit confusing topic and an extension to this. See, we now we understood this. There is one limitation that under value added statement we are looking at how it is contributing for the socio-economic development. Socio-economic perspective, we are looking at the socio-economic perspective. But we understand that shareholders' perspective is also important. How how it has to create value to the shareholders also. So to overcome this problem, another concept emerged, that is concept of economic value added. See, under economic value added, what we will do is now we calculated the profit under profit and loss account and balance sheet. Under value added, we identified that for earning this profit, we uh, how we took the help of various people in the society. That is okay. Then we have got a profit. So under value added statement, there is no much preference for the profit that we are earning, but profits are also very important. When profits are more only, we can say that there will be sustainability for the business. Otherwise, there is no any society contribution or there is no any environmental protection. So there is obviously what we have to do is that we have to increase the profits of the company also. So what under the economic value added concept, what we will do is that after calculating the net profit and after calculating the net profit after tax, all those things. So the profit, whatever the profit is available. So the leftover profit is with respect to the available to the shareholders. So economic value added is nothing but the profit that is derived after the all net profit after tax. The net profit after tax is paid to the shareholders. So before paying to the shareholders, what we have to do is that they are getting the capital from them. So for that capital, we have to pay a certain amount of return for that. Minimum amount of return for that. That is called as cost of capital. So whatever the net income that we are getting, we have to cover the cost that that will be incurred on these sources. Whatever the amount we are getting from the outsiders, we have to pay them the amount. So that amount we have to calculate. So in that net profit, what we are getting, after deducting the amount that we have to pay to the outsider, we should get a positive value. That means after paying to the shareholders also, we should have a handsome amount of money in your hand. This is what economic value added concept says that. So we earn profit in the profit and loss account and we derived the value added in the form of contribution. And now we are seeing that whether we are getting more profits after fulfilling the obligations of the stakeholders also, after paying their amount also. So this concept was developed at an US company called Sten and Stewart. Sten and Stewart, they gave a formula. Economic value is nothing but net operating profit after taxes minus the weighted average cost of capital. After paying that amount, whatever the amount is left over, how much, the more the value that is left in the hand, the more the value of the company that is economically viable. So EVA is a corporate surplus. As I told that more profit is in your hand. It is a barometer of economic efficiency of an enterprise. In traditional ownership concept, compensation of labor and management and even cost of debt is charged to the income statement. So everything is charged to the income statement. But here what we are doing is that we are trying to, after incurring all the expenses, what is the additional amount that was left with us? But in economic term, profit is the surplus to the corporate after clearing the equity. That is, after paying to the ultimate shareholders, we have to look at the profitability of the company. Then only it is adding economic value. So in introducing EVA concept, Stewart used net operating profit margin. EVA is a better measure than traditional profit. It will give more accuracy in terms of the efficiency of the business organization. It is not important to earn more profits, but it is important to have more positive EVA. So we have to, after paying their amount, after paying their share of profits, we should have more value. So in the form of cash, there will be more wealth in the hands of the company, which is available for the investors. Investors are more interested in EVA because it is a running score showing management is performing its primary task and creating the wealth. That is, they are creating more value in the form of generating the cash. So it helps in setting organizational goals, helps in the measurement of performance of divisions or organization itself, helps the management for the determination of bonuses for the employees. Again, so if you are getting more, you are getting more profits here after paying to the shareholders also. After paying to the shareholders, we have left with more. If you are left with more amount, that is more valuable to your company. If you are unable to pay the shareholders by following the value added, all those things, what is the use? So the economic value added gives you more perspective than value added. Okay, it helps the management for the determination of bonus for the, see, in every concept again we are talking about employee performance. Each measure has its own advantages, each measure has its own limitations. So depending upon our requirement and depending upon our context, we can utilize financial statement, we can utilize social reporting, we can utilize segment reporting, we can utilize value added, or we can utilize economic value added. So don't get confused between all those things. Each one has their own advantage, each one has their own limitations. We have to understand them within that context only. We cannot say this is good, this is bad. We cannot say why this and why this not. That all depends upon, as a manager of a business, we have to look, we have to know about all these concepts, and you have to take the advantage of each concept as and when it is needed for you in the decision making process of a business organization. Okay, so don't get confused about these different concepts. Just try to understand the context in which they are discussing the issues. Okay, ultimately objectives for everything is same. It is like communicating with the shareholders and investors, help in the motivation of managers, improved EVC help them. In every context it will be there, but the information that is generated is different. EVA helps in capital budgeting. EVA helps in corporate valuation, how we can value the company. Better valuation can be done. EVA can be helpful for analyzing the equities. So all these are theoretical only. See, the efficiency and effectiveness of this can only be understood once you are doing that area. Okay, research is another segment and it is beyond our scope now. But we have to understand this perspective so that we can take a better decision, which model can be utilized. So problems and limitations of economic value. The adjustments to the profit and capital can become cumbersome, especially if performed every year. So the main thing we have to understand here is the calculation of weighted average cost of capital. So we will be getting different sources of capital from different sources of capital. Each capital has a cost. Cost is nothing but the interest that you have to pay. For equity shareholders also we have to pay certain amount. For debt we have to pay certain amount. So for calculating this weighted average cost of capital, or for making adjustment to the profits and capital, so it is a difficult thing under the calculation of economic value. So estimating the weighted average cost of capital can be difficult, while many average organizations use models such as capital asset pricing model, Though this is not an universally accepted model, it is one of the model that can be utilized. So sometimes the weighted average cost of capital, the context they specified is that you have to measure the weighted average cost of capital based on the market values, but we can only measure on the book values, which cannot give you an accurate measure. And it is an absolute measure. Absolute measure means that it will only give you a figure. Absolute figure means, say, it will show that economic value is 1 lakh rupees. We cannot make any assumptions out of that. So, what 1 lakh rupees will chase? So, again, making comparison will be varied depending upon the company size. That 1 lakh may be substantial or it may not be also substantial. So, this is one of the limitations with respect to the economic value. So, try to understand uh, economic value added reporting in India. So many people are showing interest towards this measure. In recent years, EVA frameworks also companies are coming up with different EVA models. So though they are not up to the mark with the international companies, they are also going to certain level to go for economic value added reporting in India. See, this all depends upon the context. So whether to follow or not to follow is depending upon the interest of the company. Statutorily, whatever they have to follow, they will follow. When there is no statutory obligation, there is no there is no need for going for different concepts, different reporting requirements. Okay, so you can see one example of Tisco is having using the EVA measure of its mines and other business segmentation to improve their internal governance system. So not only for the outside requirements, the companies can utilize the information generated from the in the form of EVA for the internal requirements also. Okay. So this is about economic value added. Anybody is having any doubt regarding this? Actually, a bit of confusing topic, I know, but you understand it's very simply. Okay, under profit and loss account balance sheet, we will calculate the profit. For the calculation of the for you are getting the profit. How you are benefiting the society? So, sir, we are paying the salaries to the employees. We are paying the wages. In this way, we are adding value to the society, and that is a value contribution to the business also. So if you go like this, the profitability will be affected. But when uh, the other thing is that we have to focus more on profitability. So economic profitability will give you to focus on improving the profitability after meeting the requirements of the shareholders. So this is the difference between value added and economic value. So any doubts? We'll go to the last topic. We have a final topic to cover today, but I will cover that. Let us go for the final topic, and this is a simple topic and very important topic also. Those who are in the area of should have an understanding about this topic, harmonization of financial. In the first chapter, we studied that accounting principles are subject. That means, so you can understand one thing, I can understand one. So out of that, based upon your understanding and based upon the context, the accounting policies will be formulated. So, so for each company, there will be different accounting policy for one particular business transaction. So like that, there will be diversity in the accounting policies following by the company. So what happened is that to overcome that, they come up with the accounting standards that are specific to a particular country. So if a company is operating in one country, they have to follow certain set of accounting standards, and they have to present their financial statement as per the rules and regulations of that particular accounting standards. So that is specific to that one particular country. So, but it won't be. But when the companies are operating within the country, there is no problem. So the financial statement looks uniform, and the decision can be made by comparing them with other companies also. See, now what happening is that, so like this, each country has a different set of accounting policies and accounting standards. So there is no uniformity in the accounting standards. Each one of them is following differently. Now what happening is, in the globalized business environment, there is a need to go for the outside countries also. Companies are moving from one country to the other country to expand their business, to get investment from the other country. So in this process, what happening is that when a company is preparing its annual report in one country, so it cannot take that annual reports and present that annual reports in the other country and convince their investors. There will be variation. Their principles are different. This country principles are different. So to avoid this confusion in the in the segment of globalization, to bring more uniformity across the financial reporting across the world. So the accounting standard setting bodies, the financial accounting standard setting bodies of USA and international standard setting body of UK and all other global accounting standards are united together to work on bringing uniformity in the accounting practices. In the accounting practices, so, uniformity in the sense the companies operating in different countries should follow same principles. Earlier, depending upon the country, the standards are varying. Now, their objective is that all should be uniform across the country. That is what we call as harmonization. They are trying to bring uniformity across the world. So, harmonization in the context of international accounting is the process that aims at reducing the difference among the financial reporting process around the world, intending to achieve the comparison. We have to eliminate the differences, and then what happens is that we can compare our financial statement with the companies operating in the other countries also. Harmonization means the process of eliminating the diversity. That means we have to eliminate the differences in the accounting standards across the globe by bringing uniformity in the accounting standards. So there are different uh, rules under different accounting standards. That differences should be eliminated and there should be uniformity in the accounting standards through international accounting standard settings. So to achieve this objective, international accounting standard boards have developed a single set of accounting standards at the global level, that is International Financial Reporting Standards. Harmonization of accounting standards can be done. See, this harmonization, how it can be done is that we can directly adopt this IFRS standard or we can convert this IFRS standard. Adoption means taking as it is. If one country wants to take these standards, they can take. Or else they can make some changes and they can make their accounting standards relevant to the IFRS standards. So this is called as convergence. These standards can be used for harmonization of accounting standards across the globe. So by using the international accounting standards, we can uh, we can we can harmonize the accounting standards across the world. Standardization versus harmonization. What is standardization? Uh, Under harmonization, what we will try to do is that we will try to come up with more uniformity by following by bringing uniformity in the practices. Under standardization, what happens is that we will define a rule and we will try to work according to that rule. That is standardization. So if there was a guideline that you have to prepare this uh, plant and machinery depreciation should be on straight line basis only, that is a standard rule. So standardization means following the same rule across all the things. But harmonization is that different rules will be there for the same transaction. The differences should be eliminated and they have to come to a common conclusion. So this is what we will call as harmonization. So variations in different practices can be brought down considerably down. Under standardization, only one rule will be there, and accordingly, uh, the activities can be performed according to that rule. So harmonization involves a reduction in accounting variations, while standardization entails moving towards eradication of any variation. In standardization, there won't be any variation. We have to follow one rule. But in a harmonization, we will try to reduce the variation. Standardization is the process of working with defined rules and the guidelines, and the harmonization is the process of defining the rules and guidelines based on the existing practice. So standardization, under standardization, we say that these are the guidelines and you have to follow them. Under harmonization, we are doing this and we can do this. So it is based on the practical aspect. Standardization guides the accounting and reporting process, while the harmonization defines the process. Standardization means first you will tell you do like this. That has to be followed. So that guideline should be followed. But under harmonization, what happens is that We are already doing something. Based on that something, we will try to come up with a standard parameter. As I already told, why we have to go for harmonization. So different countries having different accounting standards set by their own accounting professionals and bodies. In reality, it is difficult to ensure the uniformity in the reporting practice across the group, and it is also tedious to compare the reported information across the borders because of the diversity in the accounting standards. So it is the need of the hour to bring uniformity in reporting patterns across the group by having single set of accounting standards at the international level. So you can see in a hypothetical environments where various countries and jurisdictions require a diverse and possibly divergent set of accounting standards. So where they are following different accounting standards across different countries and different jurisdictions is nothing but different regulatory environment. The transparency and understandability of the financial statement will be suffered. So we already discussed it. Once you go through this, you will understand. These are all simple points. So why we went for harmonization? So potential cross-border activity likely to be complicated. Because of harmonization, what we can do is that we can go for comparability across different countries. We can increase the understandability and comparability and reliability of the financial information. So as a result of this, harmonization process has been implemented. So these are all the points. You can see that what are the reasons why there was a need for the harmonization. The progressiveness of with the progressive globalization of the world economy during the last decades, business increasingly competing and complementing at the global level. The drive for seeking business as well as capital in the global market has become an important part of the growth strategies. We have to get the capital. See, we cannot rely on one country. So we have to go for different countries. We have to expand your business operations into different countries. Like that, you know, uh, this only happens when you can present a financial statement on a uniform basis. So as I already told that uh, interpretation of accounting standards varies. So depending upon the individual, the accounting standard, policies will vary to overcome that variations in the accounting standards came out, and accordingly the gap principles were emerged. So these are the causes for the diversity. Uh, so this is what we have discussed earlier. That is what there will be diversity in the accounting policies, principles, and practices of the country across different countries. So each one has their set of generally accepted accounting principles. So to overcome this, we are coming out with a different countries have different accounting standards set by their own professional accounting bodies. If this is the reality, then it is very difficult to ensure uniformity in the reporting pattern across the globe, and it is also tedious to compare the reported information across the borders. This is because of diversity in the accounting standards. So IFRS standards we are utilizing that. So these are the causes. So what we have discussed earlier. So again, we are looking at specifically when we are looking at these are the major reasons for the diversity in the financial report. So how accounting standards are developed at the international level? And let us understand. I already told that IASB has been the main body at the international level. It is a private sector body that develops and approves the international financial reporting standards. The IASB operates under the oversight of IFRS Foundation. The IASB was formed in the year 2001 to replace the International Accounting Standards Committee. International Accounting Standards Committee was founded in the year 1976, around 1976. Since then, it is also working on bringing the uniformity in accounting practices. But it was not a systematic body, but in the year 2001, that whole process has become more streamlined because of the growing demand. So all this will be working under the IFRS Foundation. It is a non-profit entity. It is funded by different people across the globe. It has major accounting standard setting bodies as the member. So after that, earlier, as I told that earlier it was IASC Foundation, and then it was later become to IFRS Foundation. So as per the IFRS Foundation Constitution, the IASB has the complete responsibility for all financial reported technical matters. technical matters of the IFRS form. So they will take care about all the reporting, the process of financial reporting, how the standards can be formulated, how they can be tested, how the research can be done. All those things can be evaluated by the IASB, International Accounting Standard Board. Will look into all those issues of formulating the international accounting standards, and also they will try to influence different accounting bodies to follow their standards. They don't compel any of them, but they will try to influence them through these standards so that they will bring the uniformity in the accounting practices across the world and try to eliminate the diversity in the accounting practices. Since its inception, has transformed the global landscape of financial information by introducing IFRS standards. So the standards have in effect become now they have been widely accepted. So mostly, so around 140 countries, 140 jurisdictions means almost 140 countries are accepting the IFRS standards. So it's a continuous process. IASB continuously develops and improves the accounting standard, responding to the need of consistent and comparable sustainability information. Yesterday we learned about social accounting. So they come about with additional accounting standards which are called as International Sustainability Standards Board accounting standards alongside these regular accounting standards. So IASB develops IFRS Sustainability Disclosure Standard designed to deliver truly global baseline of sustainability disclosure to inform capital. So all these are emerging. So all overall objective is to give more information. And what about India? The set of accounting standards that are converted to IFRS standard in India are called as Indian Accounting Standards. They are also called as India. Indian accounting standards are the standards based upon IFRS issued by the International Accounting Standard Board. So we have not directly adopted the IRS. We only just converged our existing accounting standards with IFRS standard. That means we made some changes with our standard and we come out with our own accounting standards. The whole accounting standard setting process in India will be done by Accounting Standard Board, which will be under Institute of Chartered Accountants of India. So since 2007, there has been efforts, and finally in the year 2011, there was a from 2011 there was a phased manner drafting of adoption of IFRS standards, and in the year 2015, uh, it became a reality that India has been adopting the IFRS practices, and slowly we are also moving to the global financial reporting system. Since 2017, it is mandatory for only for only certain categories of companies based upon their revenues and based upon their turnover. It is mandatory only for a certain category of the companies, but not for, they are not applicable to all categories of companies. So the standards were notified in the year 2015, and they were trying to implement in a phased manner to all the segments. So for banking and insurance and for financial companies, these IFRS standards are still not applicable. They are in the process because they are in need of making certain changes. So this harmonization helps to enhance transaction. It will provide wider opportunities to the investors. It will eliminate the complexity in the accounting standards. So it will also eliminate the diversity in the accounting standards. So these are advantages. So we can understand these advantages. It eliminates all. These are the basic things that we can understand. Now, obstacles means harmonization is not an easy process. We should have a lot of knowledge and awareness about IFRS and the differences in the gap. There is a need for training and dedication of all those involved in the process of this harmonization. There was a need to fulfill a lot of legal and regulatory requirements. We need to fulfill all those things. So measurement is also one of the difficult area under the process of harmonization. There will be different measurement practices. So financial and reporting information. So the requirements of financial and reporting information also will be effective depending upon the context. So for small scale industries, small scale enterprises, this process of harmonization cannot be more helpful. So this is about segment reporting, value added reporting, and harmonization. So with this, all topics were covered. Any doubts? Any doubts you are having? Any doubts? Anybody is having any doubts, please tell. See, all having all PPTs, you are having all PPTs, right? So I'm sharing the PPT here for your reference. Uh, See, I'm giving you the copies of the problems that we solved in the earlier classes also. You can share with your friends also. So it will help. These are the model problems for your assignments. So after going through that, you can practice your assignment problems and you can submit also. But they are not the same problems. They are the model problems that we have already discussed in the class. I'm adding those problems also here. Okay. Are you hearing me? Hello? Hello?
Yes, sir.
Ah, yeah. Yeah, you can utilize these problems also. We already discussed in the class. So this will help you to do your assignment problems and also help to do your exams also. Okay. You please check all the files are downloading or not. Once last time also somebody said not downloaded. So I sent you the PPT. I sent you all the problems we discussed in the class. Okay. You please share with your friends also. Actually, somebody is there yesterday. Today somebody is missing. You can share if possible with all the people. Okay. Have you understand the concepts? All these this? All files downloaded? Okay. Thank you. Thank you all. All your files downloaded so that I can log out. If you downloaded all the files, I will. Thank you. Thank you all. Thank you all. All the wish you all the best and wish you all the success. You all have to complete your exam successfully. You all get good marks. Okay. I'm logging out. Okay. I'm logging out. Thank you all. Thank you all.